Let me jumping in here on Zoom as well. All right. Good morning, everybody. We are live on YouTube, live on Zoom. Let's get the chat up and running for everything. Chat's running on both. We're live on youtube.com/Chris Pulver, live on youtube.com/Financial Wars, live on Zoom, live on Twitter X, live on LinkedIn, live on Facebook. All right. Well, happy Thursday. Nice win yesterday. Daily profit play, as expected. Nice little bounce back day. Hope you took advantage of it. We were 2 for 2, which is great. And this morning, looking a little tougher. Trump's comments last night, 9 p.m. talk. Everything's going on in Iran. We're still bombing. Oil's up like almost 10%. So what's the truth? Nobody knows. We just got to figure out and trade it. So looks like it's a head down type of day. I have a feeling with the market maybe express some disappointment. We could see a very quick retest of these lows. It may not come today, but I'm going to just try to stay out of the way. So if you're looking to maybe catch some lows somewhere in the previous lows, so we're going to gap down, over 1% today, which is going to be pretty brutal. So the market was up. We had, that kind of crazy little rally. We had a 4.78% move, 4.78% move off the lows in 2 days of trading, and we're giving a decent chunk of it back. So almost 5% to the upside, and we've already retreated, 2.3%. We'll see. I mean, this market has not broken a single high, so it's hard to say that, today's push lower, today's gap lower in futures, or I should say pressing lower in futures, gap lower in the S&P, will all of a sudden just be met with tons of buying. I think oil prices, we've kind of made this assumption that if oil is up, equities have pressure, and oil is up pretty big today. So here we go. Chat's up. Let me get the chat up here. I'm sharing the screen, right? Yeah, we're good in Zoom. Chat's open. Good. Yep. Yesterday was good stuff. Market close tomorrow. Yeah, market's close tomorrow. I'll still be live in the morning. If you'd like to join me for tomorrow, what I plan on doing is let's have some fun with Option Omega. Let me build out a quick thumbnail. So I've done this in the past. We've had like anatomy of a trade session. We've had trading strategy breakdown. I'm going to throw in another segment here and just build out a quick thumbnail. Let's do. Yeah, we'll have some fun with back testing. I'm going to show some numbers off some of my core strategies. And, obviously we tweak things, we modify things. I decide, yay or nay on whether I'm, deploying the same mechanical way or like, zero DT to me is, I mean, I do make it pretty flexible. I don't want it to be. I wish I would say like, I do the same thing every day, but there's always a little sliver of like, highs and lows matter. A little reading of the gamma matters. That gap adjusted matters. I trade futures some days, and I don't on others. Like yesterday, planning on a bounce back day, I traded futures similar to what I did in S&P. So I mean, I had S&P futures, iron condors for daily profit play that were full winners, as well as our DPP, SPX trades that were full winners. So it was good. It was a nice bounce back day. Anyway, point is, could I make it simpler? Well, I'm going to try. That way, anybody that's being confused or not quite, thrilled about taking defense or taking a standard trade and a defense trade, then let's just talk about the core strategy and manage risk. And maybe even I can tighten things up. It's going to be most likely a lower win percentage, which for my service, I'm not trying to run a lower win percentage. I like the idea of making, 89.3% winners or 90% winners. I like winning almost every day. But I also have, I'm going to change the tracker for engineered options, because engineered options, this is a little bit misleading to see that 69% in this market being down 10% is not bad, but we are winning 90% of our trades when it comes to our group, because we trade this for the week, right? It's a weekly trade. It's an income grid. That's what I built the course for. And so we have won 90% of our group trades. And so I'm going to update that to make sure this properly reflected, because I think it doesn't do this the service it's justice by saying like, well, win 69% of the time, not that excited about it, even though this market has been down, 6 out of 7 weeks, and we have been winning 90% of those weeks. So that's what I'm going to continue the engine option. So I think that deserves a little update in the tracker, and we'll play around with option omega and get some tests running. So off we go. Right. But the idea is we're trying to make money move the needle. Right. Okay. So let's see here. Caught that whole drop last night. Nice stuff, Daniel. Good stuff. As always, you're killing it, dude. Opportunistic for sure. I wasn't really sure if the Trump talk was, I know it was going to be markets are listening, but uh, when he says April 6th, April 6th, April 6th, and it's not April 6th, it's April 2nd, and the markets reacted to it today. So good on you, man. Good trade. Buy and sell in relation to bid and ask. If you're Blake's asking a question about bid and ask. So a bid price would be something that you. Again, this is kind of the confusing stuff about where you're taking your trades. So the bid price, then you have the mid price, and you have the ask price. Okay. So the bid price, this is what I use it for. So hopefully it's a little bit more straightforward. And the mid price. So a bid price would be what I sell. I sell the bid price. Okay. So if I can sell at bid or higher, that's a good fill. Does that make sense? I'll put mid down here so I have more space. Mid is I tend to get, I want fills at mid or higher for credit or lower for debit. If I'm doing a debit spread, I'm going to try to get filled with a mid price, and the lower the debit, the better. That gives me a little bit more profit, right? If I'm doing a spread, like a credit spread, I'd like to get filled at the mid price or higher. Make sense? So mid price, I'm trying to take that up a little bit, depending on where my trade is, whether it's a debit spread or credit spread. I want a slightly more favorable trade. Obviously, if I get filled to mid price, that's fine. I don't like getting filled worse than that. So, for example, if I was trying to do a credit spread and the mid price shows, $1, I don't really want to take less than $1 on a credit spread. Sometimes I have to, but usually I try to stick with that mid price or better. Okay, and then the ask price is going to be where I'm going to be buying something. So I want to buy at ask or lower. So typically, if you just buy a call option, the ask price is the price. That's what you buy. You buy the ask, you sell the bid. Okay. But like I said, I'm just trying to get a little bit better price for me as a seller of the bid, or I'm trying to get a slightly lower price on the ask as a buyer. No, I get it, Daniel, but look at the timing though. I mean, it's not a mistake that the timing was right there. That Trump's on the calendar, Trump's talking, and the markets use it as an opportunity. Nothing has to do with Trump other than a 7 a.m. tweet on a Monday morning, right? I mean, it was already in the calendar. I think they just used it as a reason to slide lower last night, because I'm sure most of the selling was happening after he resolved his comments. Right? He wraps up. Market's already taken it. All they heard was, "We're still, bombing Iran. It's going to last a couple more weeks." Market didn't like it, so yeah, it's just like it's wrapped up in the excuse. All right, so Blake, does that make sense as far as we're looking for bid mid ask? Hopefully that helps. Okay, I'll clear all this stuff out. All right, let me build a quick thumbnail. I need a thumbnail. All right, I'll build a thumbnail out, throw this in the little tracker here, get rid of this image, we'll get another one. All right, we're getting the comments here. No big losses, wise trader. There you go. Somebody was asking, I think it was Mark asking me yesterday if I could show the expected move box on Thinkorswim. So I will log in Thinkorswim on the desktop, not the web. Okay, I built the expected move box for TradingView and for Thinkorswim desktop. Don't show ChatGPT. Stop AI in my face. You know, see what AI's version of me looks like? It'll be here in like 20 seconds. I'm going to say, there it is. Okay, so that's me on AI. Idiots. Remove the person. Yeah, at a glance. Anyway, funny. I just come to accept that a lot of the AI stuff is about 80 to 90% of what you want, and then just a little polishing is needed. So, not on some stuff. I mean, I've had a lot of fun building out some content on Claude and Perplexity. ChatGPT has been fine. OpenAI is fine, but they have their moments where they drive me crazy. It still doesn't remove my person. Gosh darn it, so annoying. Should we look at our engineered options as I may fill first 3 weeks today? We already got filled on 2 of them, Dan. We got filled on 2 of them on Monday. Took the trades, got filled on Monday when the market slid. There we go. We're finally removing it. Good job. All right, so this can go in here. There. All right. So we can play around with that tomorrow. So come join me. Markets are closed. It's kind of nice. Good Friday, Easter weekend, and we'll still talk for a little bit in the morning. Okay. So Dan, engineering options, we already got filled. The 4-6 expirations, we have the participation break even. We might have some defense trades filled today. Maybe, but really we just kind of came back from the recent highs. So we'll see where we're going today. I mean, we have to get all the way back down to like 63.10 on SPX to get filled on a defense trade. If we take out some fresh lows, it's possible. And we also have non-farm tomorrow. So ADP numbers were okay. I'm curious what non-farm prints tomorrow morning at 8:30 a.m. Actually looks better than AI portrays me to be. Oh, thanks, man. I appreciate that. All right. So let's get some pre-market. Just log back into Tasty. So SPX pre-market. I'm showing 71 points, 70.93. So SPX Thursday, 70.93. Because of the gap lower, I'm going to make a decision to either one, take the gap adjusted and go up 71 points for my bear call spreads. I'm probably just going to focus on bear call spreads today and stay out of the way. VIX. Let's go back to, this is VIX 1 day. Let's just go VIX. We're back up to 27.75. I would imagine that the VIX is going up. We're going to see more pressure at the downside. I'm not necessarily trying to call the bottoms today. I think bear call spreads would be a little bit wise. It could still be an expect to move type day within my gap adjusted box, which is what I want for. Look at this. We got another big fat gamut this morning at 6,500. Let's get a reading on that here. So we're probably flipping into 0 DT negative gamma. Yes, we are very quick. And there's a huge level at 6,500. Gap wise, we might find it just from the percentage sell off alone, 1.47%. We're already going to be through it. Wow. So it doesn't take much with a gap like that to hit, all the major gamma levels. Now the question is will pressure be there all day? So pretty large transition zones between these gammas. So do we, gap lower, spend the entire day going back up to try to find positive gamma? Either way, if I'm selling calls today, I want my calls to be above this high. Possibly if I can still get premium for it, probably above this high to be safe, right? That would require the market to do a pretty big move. I mean, points wise, the gap alone at 1.4, we're already talking about a 90 plus point move to the downside. So if we're going to get 71 points or 70.93, we'd have to have that plus the upside. And again, like, I don't know if what's the market going to love today, unless Trump has something up his sleeve to have comments last night and say something the market didn't enjoy hearing, and then flipping it around today. Like, again, it's like, just put a lid on it, man. Like, say something, take the win, and shut up for a second. Let the market just digest it. I feel like it's just, I don't know. Maybe that's part of the crazy, is just you never know what's going to happen. So risk management's the key, and buckle up because it's never a dull moment, and especially in 0 DT, like, it is a grind, but we try to stick to a plan, have a method. There's a reason we do this stuff. We do pretty well. Market close Friday. Yeah, that's true. Tomorrow, nope, it's closed. I think, I mean, forex, I believe, is open tomorrow. That might be about it. Pretty sure that stocks are closed, bonds closed. It's a bank holiday. All right. So we're going SPX 70.93. Let's make the gap adjusted. Let me log in here to my Thinkorswim. Where did it go? What the heck? Oh, there we go. Okay. All right, logging in, and I'm just going to put in the data here. So I'm going to use my expected move box, adjust this to 70.93, keep it showing box 2 so it's gap adjusted. So we're going to be gapping lower. We'll take the previous day's close plus the 70.93. There we go. So this can move over here. I'll delete some of these alerts and just add them fresh when I know where I want price to go. Delete. Green line's what I've been using for my levels, so I'll get rid of that. And get rid of that. 70.93. Adjust it right here. All right, so just adjusted, all boxes adjusted 70.93. We're going to have a gap lower. Okay, so it'll gap lower. We'll start the box 2, which is the gap adjusted. It's going to start right here at the close and go up 70.93 points. So we should have something right up here for my high. So right around, I mean, again, I've got to make the decision. Yes, I'd like to sell premium and keep it out of the way at 66.45. Most likely, I will probably, with the gap as large as we are seeing today, I might just sell right above this like 65.95 or 6600 handle. Recent highs are on 66.10. So I might go a little bit lower depending on the deltas. It's probably still going to be a very low delta. But either way, that'll be my most likely decision, is sticking with some bear call spreads today. Bull put spreads might be fine if we do something like this. We have to, if you're doing a bull put spread, I would not want to hold on to them all day, because if we gap lower and we just basically pause and lower, we push down, I would want to be selling, I don't know, maybe 100 plus points out of the money. And that'd be a pretty nasty sell-off, but it's very possible. I mean, we've seen some 2+% days to the downside. So if we're opening up 1.4% lower, and we slide another, let's say we go another 70 points. So that's about 91 points lower. Another 70 points on top of that puts us around 160. Tentatively, I'd say the low's around 64, 64.15 or so. Be careful of the market coming back and eating into this gap. So, I mean, I know it seems nuts to be like, well, I'm going to sell puts way down here, but I'd probably sell puts way down here with some defense because the low is 63. Okay. I mean, volatility is high. We're going to have a 27 plus VIX. We could probably get some premium around the 6,300 zone. Now, that's way out of the way. Okay. If it's, I mean, and I'd let it sit as a pending order just in case and put in some defense. So maybe, 10 wide or 15 wide, put in some defense and see that 6,300, isn't necessarily going to be breached today. But what would that sell off be if we hit? I mean, if we are down to the gap plus the expected move, that'd be the market down 2.43%. I mean, one thing we haven't had is just like an outright awful day. We've had 1+% sell-offs. We had 2+% sell-offs. We haven't had something outrageous like, oh my God, the market's down 3.5%, 4% today. That hasn't happened in 2026. Right? Claude, I would say probably one of your best chances to do that, Daniel. Yes. I mean, it should. It's just, but there's going to be a lot of trial and error to make sure it works seamlessly. That'd be it does a great job of building out code. Automated strategy, I would probably want to have a team look over that. Like Daniel Sinig with his team at tradingindicators.com. Anytime I need like a final polish, especially with APIs or automated strategies, I would have a coder look at it. You could probably find one on Fiverr if you want to just find somebody randomly, but I trust Daniel's team. They've done great jobs for me with a lot of stuff I've had over the years. So anyway, just the final touch, especially with automated stuff when it's going into your broker platform and live trading. So, all right, we have about 6 minutes for the open. Let me get into here and let me open up my grid. Okay. So here's my grid layout. This is on Thinkorswim. This is the expected move box. Let's see where price opens. We're going to be gapping lower today. But if I come in here and right click my chart and go into studies and edit studies, I take the expected move box, click on the settings wheel. The expected move is 70.93. Again, that's per Tasty Trade. So if you're pulling the expected move box data from your Thinkorswim, what is it today? It's probably lower, right? Show box one, I'm going to hide that as no because I don't want to see box one because I know it's going to be gap adjusted with a 1.4% gap lower. So I just want to see box two today. There we go. So on the, this is the 5-minute chart. Let me see if I can change this to a 1 minute. So time, go back 5 days. I'll go 3 days and 1 minute chart, add. There. So there's my 1 minute chart. I'll compress this a little bit and we should see it opening bell. Opening bell is going to be gapping lower. Should print my expected move box high and low, gap adjusted. Okay. Is this recorded? If so, where? Every day we're live, it's recorded. Yes, all these are recorded. So this, you can find this, probably within an hour after our live session on my YouTube channel, youtube.com/Pulver. It's just going to be timestamped for today because I just used a blanket like, Bulls and Bears are fighting every day. But yeah, for 4-2, it'll be in my YouTube channel. Okay. CL over 113 now. Yep. I thought about a directional trade on oil. That would have been nice. Could have taken like a 1 DTE. But anyway, we'll see if bonds can hang in there for my March Madness trade. Hopefully they do. Those were 10 deltas. I'm hoping that's efficient. Bonds haven't been super reactive. but we'll see. This is a pretty disruptive move. All right, we're good. We're good. All right. So we'll keep an eye on this. It should be adjusted with the 70.93. Same thing here on TradingView, 70.93. This is on a 1 minute time frame. So I want to see this thing print right away. There we go. And we'll get some levels in. Again, my initial plan for the day is because this gap is going to be so far to the downside. Most likely, if I'm selling calls, it's going to be up above this level, or at or up above this level. I don't mind going a little bit wider today, going like 15 to 20 wide to try to get some premium. And on the put side, no funny business here. We had recent lows from Monday around 63.17. I'm probably selling some puts below 6,300, which is way beyond the expected move. Doesn't really matter because if I sell puts and I do a defense trade, that's going to be the plan. It's going to be way outside the norm. The market can still contain itself for the day, but I'm trying to go a little bit wider. I don't mind going wider on my credit spreads, as long as I feel like I'm out of the way. Okay. Because yesterday it was not a surprise that a blow off move like we saw on Tuesday had an efficiency day yesterday, and it was ridiculously efficient. By the way, I mean look at this. The iron fly type trade. Iron fly would have landed a big fat profit trap for the day because this thing was within 10 points of the open, and this continues to impress me with some of these. On the rare occasion the market has an outsized move to the upside or downside, we have seen lots of days where there's been plenty of intraday volatility, but the market essentially opens and closes within about 10 points of each other. And that, again, it's still a risk in the trade for an iron butterfly, but those payoffs are insane. That type of trade could give you, I don't know, probably $3,500 to $4,000 for maybe like a $1,000 risk, and you can have a decent chunk of that go your way. And I mean, probably have a 2 to 1 or 3 to 1 on the day, which is awesome, especially for zero DT. That's great. But again, there's risk. You're still going to probably throw, $1,000+ risk at a 40, 50 wide iron fly, but it's lovely when it happens and you give yourself, 30, 35, 40 points of movement and the market settles within 10 points. That's a big payday. So just food for thought on some of these, when we're planning on some efficiencies. All right, market is open. Let's see where price opens. See where my indicator prints. There it is. So 66.46, pretty much the math I talked about. I'm going to try to go around 66.10. Let me get some gamma this morning. We do have some space in between. So we're opening down below 6,500. Let me see what I can get some premium on. I'm going to try like the 6,600 zone to about the 66.10. So 6,600, 66.10 on the call side. And on the put side, I want to be down here below 6,300. Again, I might not force a put side trade. This market just hasn't really had a crazy dump day, and I don't really want to be on the hook to do it, especially after clawing back and having a pretty decent week overall. Yes, Tuesday wasn't fun, but I'm still positive on the week. 66. Let me see if I can get some call spreads in right now. So SPX for today, call spread. Damn it, the deltas are so bad. So it's really, really low delta to go up to 6,600. Let's see. I mean, negative gamma below 65.50. Maybe I can flirt with a 70 a little bit lesser. Let's see if 66.70 is okay. That's a 7 delta. So call wise, I mean, it could stack up, get $1.65, staying above the negative gamma sign for the day. This is 50, 70. Gap fills around 75. Let me see what this offers. If I went, try something like this, 80. That's not terrible. I could play some defense in here for 15 wide. That's a 6 delta. I'm going to take this trade. It's enough to make a little buck or two on the day. So let me see if I get $1.20. Give me. Don't just run away from me. I'm going to try to get $1.50 on this. This is 2 bear call spreads, 15 wide. I want to go a little bit higher. Gamma's up here 80. Positive negative pivot is 65.50. See if there's any type of fight to the upside to get above 6,500 today. Let me see if we can get filled at like a dollar. I'm not taking less than a dollar on 2 freaking credit spreads. That's pathetic fills if I'm doing that. So I'm gonna try to go after a dollar 25 to a dollar 50. That'll be a pending order. Okay. I might have some luck on the put spread side. Let me go down to 63. Yeah, I'm just playing it super safe today. These are offering little to no credit. 63. I'm gonna go 95 by 80, 90 by 75. Again, that's like 10 cents debit. It's so low. Fudge. All right. Well, those deltas look like absolute garbage right now. This is more mechanical. 65 by 70. I'll go 10 delta. Okay. We just opened up. We haven't really moved a ton. A little bit to the downside by just a couple of points here. So 10 delta on the call side. That is still above the positive negative gamma, right? 50. Yeah. Okay. So I'll try 10 delta there. And if I went 10 delta puts at 64, I mean, I can get 80 cents on a 10 delta 5 wide. I wouldn't take this trade for less than a dollar. Let's see. This is part of what I want to talk about tomorrow. Is if this thing fills for a dollar, I'd still want to play some defense, but I don't feel comfortable calling this the top of the day or this the low of the day outside of, it's a delta neutral, and 10 delta typically gives you a paper trade of 90% chance of profit, which is fine. But where I'm looking at the actual charts, I'd much rather go higher on the call spreads, lower on the put spreads, and I don't mind going wider because I feel like you have a higher probability of profit. Yeah, big gap down at the open, right? Right. And there's my expected move box. So gap adjusted 66.46 with that number, right? 70.93. So we have lows at 64.41. This opening price was around 65.11. 65.11 was opening price. And this opening price was different. This open was 64.96. So again, that's a pretty big difference in opening price between TradingView and Thinkorswim. Calculated boxes comparable, but the gap adjusted here is 64.25, and this is 64.41 because so there's just a big difference in the open. The TradingView price opened almost 15 points lower, and therefore the expected move box is 15 points lower. So I mean, the box is doing what it's supposed to do. It's just the opening price on Thinkorswim is different than TradingView. So the box is doing what it's supposed to. It's just you've got about a 15-point difference in opening prices. All right. So, I mean, do we just jump in and immediately just sell bear call spreads? I mean, 76 isn't terrible. I mean, all right. This is a maybe. This is a 5 wide for a dollar. If I can get it filled for a dollar, I don't mind taking the trade. But I'd like to have a little bit more wiggle room to sprinkle something else in. This one's not terrible, but I don't just love it. That puts me expected move box low is 64.25, so I would be, below that low. VIX gapped lower a little bit, which is interesting. If VIX goes higher, we're probably pushing lower. I don't know, Kyle. It happens, man. I'm not sure. You can check multiple. I mean, you can check barchart.com. You can get some other price feeds. But I don't know. It happens, but on gaps like that with big futures slides, you're going to see some. I mean, 5 or 10 points is, I don't know. It happens. Like if I go opening price on Quote Stream Media, let's see what the opening price was this morning. So I've got an open around 65.13. So again, like a couple points off of Thinkorswim, and TradingView has a few points off of that, like 10 points off of that. All right. So as we just kind of sit here for a second, ponder, it's like, what is the best trade for the day? I'd rather be a seller of calls just because there's so much pressure on the market to have this downside move. But if I'm going to sell bear call spreads, I don't really want to play in here. 65.40, 65.50. I think that's way too close. We could have a, attempt to fill the gap today. That's 65.75. So I'd like to be selling above 75 if possible. So that's 65.75. So my pending orders up here, starting them at 65, 80, 85. I mean, I like these trades. It's just only showing, 75 cents right now, which is really crappy. I mean, is it a high probability trade? Sure, but I'm taking on a lot of risk if I'm doing two bear call spreads to get 80 cents. Probability profit is like 95 to 96%, but I'd obviously rather, get a dollar and change for two spreads. And even my 5 wide is not filling for, I want that. This is the one that probably the most strict on is give me a dollar to risk 4, right? And then we'll see if prices do stay, somewhat contained. So let me put this one in for a dollar. Okay. I'll put this one in for a dollar. I don't mind taking some small defense trades in this, credit only, if I'm going 5 wide. So I'll put a pending order in using the 10 deltas. Let me see if there's any importance to 6,400. That's gap fill area. Let's see. Maybe playing some defense down here. I don't like that trade. I'm gonna get that. I'm gonna put this one lower. All right. So bear call spreads are gonna be tough to fill unless we have the market, go up this morning, which I'll keep an eye on. I'm gonna try to get something going on the put spread with some defense. So honestly, what I think the market is attempting to find is that blow off move we saw from Tuesday. That inefficiency happened intraday. I think the market is gunning for that. So this could be the target for the day. If the market bounces off of there, I just think this is the market finding some efficiency. That was an unexpected move as far as how firm and how aggressive that was. You can see on a 1 minute time frame that's very inefficient, right? And this is liquidity stuff that happens in the market. So that was a very inefficient move, even on a 1 minute time frame. So I wouldn't be shocked to see the market come back to like 64.50 today. So on that note, 64.50. If we get there, I mean it's only 25 points away. Even a butterfly spread isn't going to be super rewarding. 64.50 put spread. Let's see if we can do something like this. 50. That's 10 wide. I mean, I pay 75 cents. I mean, it can probably double. Like that little trade right there. If price goes down a little bit further, I'm just not going to chase this thing, man. I'm going to keep the bear call spreads, keep an eye on those. Let me see if I can get something around the 60, 62.75. That's so far down there, but $62.75. I mean, that's a 1 delta. Lows around 63.15, 63. That was like 63.16 lows. Round number 6,300. How bad of a sell-off would that be on the day? That's a 4% sell-off. That'd be a bucket of yuck if we had a move like that. Could this offer us any premium? 6,300. I'll try the 6,300s. So 62.95. I'll try stacking up a couple of these. 62.95. 80, 90, 75. That credit is so low. I'll put it in for $1.50. So right now I'm doing 2 spreads. It's basically 2 iron condors. But neither one is looking good as far as fills. I mean, they look good as far as safe levels. They just don't look good as far as credits that the market's offering. The bear call spread is the closest. I can get maybe $1 on that trade. I will take $1 if I can get it. If this bear call spread, 2 of them will give me $1, I'll take this trade. But I'd like more. I'd like $1.25 or $1.50 on it. So just give me a second. All right, Ernesto says 66.25, 64.10 for 10 wide, so 66.25. Okay. And then 64.10. I gotcha. So you're going pretty low delta. Or I'm sorry, higher delta on the put side with that gap adjusted. I gotcha. I gotcha. All right. I'm just going to keep an eye on these two right here. So the bull put spreads, way out of the money right now. Those are super low credits. The bear call spread has a fighting chance. Like I said, not excited about 80 cents. Trying to at least get like a dollar ish, $1.25, $1.50. So let's just let this chill for a sec. I mean, here's real time gamma. 6,500 is my biggest gamma. This could be a sticky point for the day. We've already opened below the 50% ATR. So if we are pushing, down towards the 100% ATR, that could be tested and maybe offer up a bounce. Look left on the chart. There's the inefficiency from Tuesday. So, 64.50, that lines up pretty well with that 100% ATR. Not terribly expensive. Let me see. I mean, it's not going to pay us if it hits it early, but if we did, I mean, let me see if I can go like 30 by 50 by 10. That's 20 wide. Let me see if I can go 15 wide here. So for $1, I mean, if we get direction right, we test 64.50 throughout the day. I mean, for $1, this has the potential to probably make us 50 to $100. Pretty low risk trade if we're sliding down here. So it wouldn't shock me. I just don't know if we're going to be breaking and just falling off a cliff. We might just kind of hang out around 6,500 for the day. So my question is, could I build out a trade? Iron fly around 65. All right, I'll keep an eye on this one. So that's 35, 15 wide, 64, 35. Okay, are we going to hang out at 65 for the day? If I went 50, that'd be 65.50 up here, 64.50 down here. I mean, if we stick to 6,500, this is the type of trade I talked about yesterday, where it's like the market only moved about 8 to 10 points from open to close. You've got a $3,200 profit opportunity, and you take off, 8 or 9 points from that. You're making over $2,000 on the day, but it has to stick. So we already slipped a little bit lower than opening bell price. It just depends on if 6,500 is something the market can kind of cling to. There's a lot of open space. I'm not going to take that iron fly, but there's a lot of open space between, there's this one gamma level at 6,500 and the rest is 6,550. So if we're going to make an attempt to try to fill this gap today, that's why I want my bear call spreads to be up here, out of the way. So we might still get a fill on that bear call spread. It's up to about that's close to $1 right now. $1.02. Let me see if I can get this in for $1. I'm going to take $1. Let me see this. If the mid price goes to like $1.10, I'll probably slip it in there for $1, $1.05. Let me try to get it in for $1. And I'm going to add it. All right, I'm in for $1 for bear call spreads. So this will go in Telegram. I'm going to try to put another trade in for a little bit more, maybe closer to $2 to $3 on that one if we have another pressure move to the upside. But coming in the chat. So I'm doing bear call spreads only. So SPX 4/2 expiration. So that filled. The activity is incorrect. I'm selling the 80 by 95. So 65.80, 65.95, 65.85, and 6,600. So filled for $1. That's in Telegram. I'll take a similar trade here. I'm going to try to go after, let's try to get something a little bit more meaningful, which I don't think it's going to fill, but I will kind of enjoy it if it does. So keep an eye on this and see if we get a rally back up to try to gap fill. Definitely going to play some defense in this one. So that is putting a line in the sand for me around 66.80. Or 65.80. 65.80. I want to see price stay below that. Okay. So that's my bear call spread. I'll put another chunk up here around the 66.10 zone. So 66.10, 25, 15, 30. This one offers another like $1 to $1.50. I'll take that trade as well. And I can sprinkle in some defense in here. So I'll keep an eye on this one. I'll put $1.50 pending. All right. So realistically, I'm probably just going to get filled on the bear call spreads, and take a look at our expected move right now. This is where price is supposed to go for the rest of the day, based on current volatility, plus or minus 40 points. No major crazy news on the calendar, no Trump talk. Major news tomorrow is a non-farm payroll. Talk was last night. This should be a pretty safe $100. Okay. So this is where price is expected to go for the rest of the day. If it does that, we have an easy winner today. Put side, I'm putting it way down here with some pending orders. Remains to be seen. Still a long ways out of the money. Super, super low deltas here. These are 1 delta moves. We'd have to have another kind of anomaly type move, right? Well, forever remembers the day American industry is reborn. Yep. Doesn't feel like it, does it? It's an interesting one-year anniversary. I thought about that with that surge that we saw on Tuesday. I'm like, gosh, it certainly wasn't a, hey, it's a good time to buy type tweet, and the market's up 9%. But still, we had a 3+ % move plus a big gap higher. I mean, that was nearly a 5% rally off those lows. That's not a nothing burger, But man, Liberation Day last year was a lot like COVID as far as like the market's reflexive reaction. So anyway, 2026 is stacking up to be a really, really wild year. Great for stock pickers, great for trading strategies, difficult for the buy and hold investor. That is why I keep going to my risk management overlay. I talked about this. I mean, I was in an interview yesterday that will pop up on our YouTube channel for Unfiltered Finance. I mean, this risk management exposure uses like 80 different data points to show whether we should be in the markets or out of the markets. Rarely do I see this completely in cash, but right now it's completely in cash. So you can play, again, this is for more of like the passive buyer, buy and hold. So BIL or SGov or USFR. Those all are offering about a 4 to 4.13% yield risk-free. And you get that injection every 30 days. So you're going to get every 30 days about a 0.3% bump in your account. Whatever cash you put in there, it is fully liquid. It rolls every 30 days. Okay. So, I've been parking cash in and out of these things the last couple of years. It's fine. I mean, it's not that, look, I'm not excited about risk-free. I'm not. Like, I'm not this trader. I'm not going to be like just sitting on the sidelines, not doing anything. What I will do is I will have cash available, but cash can sit here. And I'm also going to work with some of the cash on some more active stuff like, buying some like one index, like buying SPY and, selling covered calls, buying DIA, selling covered calls and trying to generate, maybe $250 to $500 a week. That's okay. If I could do that per week, obviously repair the stock and hold on to it a little bit longer, you can probably do pretty well and generate maybe 0.1% a week, 0.25% a week, maybe half percent a week. That adds up. There's ways to be active with options without having to put your entire account at risk and still do pretty well as far as year to date. But it's a trader's market. I continue to mean that. Like, it's a trader's market, as illustrated by like every one of my services I'm running. We're making money. We're having good trades. We're having success. We're finding winners. But the buy and hold stuff has been challenging. Okay, now that bear call spread combo is up to about $1.45, $1.50. I will keep an eye on this one. I might take this trade at like $3, $4, $5 and then put in some heavier defense. It's still, out of the way. It's still single digit deltas. Okay. So probably the profit remains pretty high. Defense wise, if I went 15 wide, let's see, that'd be 15 wide. There's some risk in there. I just want to point this out. Like, there'd be risk in here. If price gets back above 6,600, 6,605, there's risk on that trade. Do I think it happens today? Not really. So let me see. Should I play around with this and get a 20 wide profit trap? Well, it can help offset those two bear call spreads if I do it. Let's see, that's starting at, my risk starts at 80. I don't mind this getting the defense in for 5 cents. I'm going to take this trade. Try to get a 5 or 10 cent debit max. Let's go 5 cents debit on this defense. Make sure this isn't overlapping first. Okay, so there's no overlaps here. I'm going a little bit wider. I could tighten the risk up here. That's a 15-cent debit. Okay, I'm going to go a little bit wider and accept the risk. I'm going to try to go like 5 or 10 cents debit, 5 cents debit. So 5's not filling. 10, try to get filled at 10. All right, I got defense in for 10 cents. Again, totally optional if you want to play defense. I'm playing it. I'm accepting the extra risk. It's $1,500. On my other bear call spread, it is now trading for about 75 cents. And it's higher. It's a 66.10. If I could sprinkle in like another dollar and change, I'll probably take that bear call spread combo as well. Okay, DPPD filled at $1.90. Good. I mean, if you're taking the bear call at $1.90, that's great, man. Now it's $2. It's good fill. I might throw one extra one in here. So I did 85 by, let me try the 85 by 6. That's another dollar credit. I'm going to take another trade here for $1 credit. It's offering 90 right now. Let's see here. That way I can finance a little bit more defense if I take this trade. Again, accept the risk if you're doing it with me. Let's see. If I stack these up again, that's $1.80, $1.85 stacked on top of my dollar. That's a lot of risk. That's a lot of risk sitting right there at that chunk. That's why I'm trying to go a little bit higher. I will go. Let's see if this one gets over $1. I'm going to put another stack of bear call spreads just a little bit higher, right up here, and it's trading for about 70 cents right now. Good fill to Roger for 215. That's a great fill. Excellent fill. Yep, very good. I mean, look, I settled for $1. So a lot of you are getting much better fills than I am. Great. You just remain patient. Excellent fill. I suppose trading XSP rather than SPX, I should expect half the bid ask. I mean, what are your strikes, Keith? I mean, if you're going, how wide are you going on XSP? Okay, I might take this other bear call spread for like 75 cents to it. I want at least a dollar, but I don't mind throwing in the extra finance and trying to make something where it's like, all right, I'll make about 175 bucks on the day, play a little defense. I've got defense in for $1,500. All right, just stay patient. And here's real time gamma. So, there's positive negative gamma here at 65.50. There's a gap fill level around 65.55. I would think the market would struggle there with this type of move lower. Market kind of slowly works its way back up here. Bears kind of step in and take it back down. So I might try to take advantage of a slightly higher bear call spread, but kind of filling up in this area is pretty good. Right now, that initial bear call spreads up, to $2 and change. I mean, part of me wants to take it, but that's also a lot of risk sitting right there at like 80 to 85. I'd rather get this one up to 66.05 or 10. Where is my defense trade? So I could go here. Let me try this. 66. That's 10 wide, 15 wide. That's over a dollar right now. Okay, this one's over a buck. This one's up at a dollar. Okay, see if this will take the extra dollar here. All right, I'm going to try to get in here for about $1.05 or $1.10, $1.15, $1.20. Let me go $1.15. Come on. All right, give me a dollar. All right, just got filled for another buck with 15 wide. So I'm putting in bear call spreads. Now it's going to be more than a dollar. SPX 4-2 expiration. Again, I'm pretty discretionary today, taking some bear call spreads, kind of stacking up some tops. This is the 66.10, 66.25, 66.15, 66.30 dollar credit. If it fills for better, it's a good fill. Right now, it's trading for about 95 cents. So a dollar is not terrible. I obviously want a little bit more, but this gives me about $2 to work with on the day. Okay. And I still have some defense sprinkled in that kicks in around that 85 handle. So 75 to 90 is a $1,500 profit trap. So the trades I just took, uh, these two to these two, these are both 15 wide spreads. These are much higher. These are still have about a 95+% chance of profit right now. These are sitting more closer to like an 85 to 87% chance of profit. I didn't draw that very well, but the delta's gone up a little bit. So I've got one defense trade in, and that is the 75 by 90. 75 by 90 by 20. That's my defense trade. So that break even for me is 66.05. So I need price to stay less than 66.05 in order to not take on additional risk with my defense trades. And obviously for my winners today, I want price to say less than 65.80. If we can say less than 65.80 today, that's good. That would be $200 profit. Okay. If I get into any trouble, I'll monitor it. Shouldn't, I don't know. It should be fine. Yep. So defense trade. So 65.75. 65.90 and 66.20. So it's 15.10 max risk if price is greater than 66.05. Okay. Otherwise, it's the profit trap that's sitting right there, kind of in the bulk of my bear call spreads. So what I'm going to do for the morning is there's my 80. And I mean, that's really what I need to monitor for the day. If we're up here towards, 62 or so, I'll put a chart alarm at 60. Okay. That's kind of gap filling. Positive negative gamma today is at 65.50. So I'm going to see if price can get back above this, which I hope that it doesn't. At this point, here's what's easy on the day. Having about $2 of credit filled right now. If price comes back down to retest the lows, that $2 credit is probably trading for less than $1. I could probably just take profit and grab a quick $100. So if we take out these lows, I'll look to see if I can manage profit. And I'm not looking to hold this thing all day. So let's see if we can break these lows. And if we do break the lows, then we'll hopefully lock up and grab some quick bucks. See if the market is interested in trying to find this inefficiency. No, Roger, that profit trap is just like any other butterfly. So it's a broken wing butterfly. The profit trap is at the end of the day. So at the end of the day, if price is hanging out around 65.85, 65.90, then you've got up to $1,500 of profit. So you'd have to have price in order for that thing to be perfect. If price is at 65.85, okay, to 65, just type it up. So if we're at, let's say 3:30 p.m. Eastern time or after, if we're at 65.85, you're going to see, again, max profit would be about $1,000. Okay. That's going to be near the end of the day. Okay. If you're at 65.90, max profit could be up to about $1,500 profit trap. End of day. So if price is going to close around 65.85, you got $1,000 profit trap there. That is going to help alleviate some of the pain from the 80 and 85 credit spreads that we put in. Would it be enough to offset it? Well, sure. If price is at 65.85, I'm only taking on $500 of risk on one of my credit spreads, and I'd have a $1,000 to $1,500 profit trap, which could still help me make a net profit on the day. Okay. But if price decides to go all the way through 6,600, 66.05, this defense is rendered useless, and I take on additional risk with my credit spreads and defense. But I mean, we've only had defense fail twice. One was last August during Jackson Hole, and one was Tuesday with a crazy surge, and the market was, making that rip through the end of the quarter. But right now, I mean, we're talking about a 7 and 6 delta right now, which based on the expected moves should be out of the way. There's over a 90% chance it stays out of the money. That's what we want it to do. So we'll see what the day does. VIX wise, I mean, one thing that's always interesting too is like the VIX is retreating this morning. So my top bear call spread is only trading for 85 cents. The other one's still a little frothy there at $2.50. So I'm taking on a little risk. We'll see if we can just stay out of the way. Lines in the sand for us that would help us. We have a 65.50 negative gamma spot. So right now we are in negative gamma. So below this little yellow box, right here, it is negative gamma. So this line, it is positive gamma above. And my drawing skills are lacking today. And negative gamma below. So price finds it, rejects, negative gamma prevails. Okay. Our 80 strike is right here off of the close yesterday. Again, I'm hoping that with the momentum, with the aggressive gap lower, that the market is not going to find that move. And based on deltas, we opened up around 12. Okay. Remember that plus minus 71 points. So I've got a 12 here. Let's go 65.12 open plus 71 points puts me at 62.83. That's right where our bear call spread is 80. Okay. So I don't think, I mean, again, by mechanical standards, we shouldn't have price threatening or closing above 62.83 today. That's based on the math the market gave us this morning with, volatility, gap lower, expected move box, all that stuff. So that's my probability trade. That's where I put it. But I'm taking on a little bit of heat since my dollar and change credits now trade for like 270. So I'm down a little bit, but that's why I put in some defense just in case. But we'll keep an eye on this for the day. All right. So while we're at it, I'd like to get a head start on tomorrow for some of these trades. This one is, there we go. This is a little bit better. Okay, check this out. Okay, for anybody that wants to see some daily profit play action, this is a great trade. Okay, this goes back since we started trading 0 DTE in summer 2022. This is getting filled for a this is kind of nuts. Look at this thing. 51.4% win rate, but it's a 1-to-1. Okay, with fees and everything, average winner would be your full 250 minus your fees. You're getting 246 for your average winner, 242 for your average loser. Over the course of 407 trades, you're making money. It's not a beautiful equity curve. It's going to be just a crazy battle here, but look at this thing. We've got some consistency. It's not great, but it had its streaks where we had some winners. Do I love the idea of taking this trade with a 51% win rate? Not really. This is a 25 delta, okay, which is pretty much right at the expected move, okay? So when you take your opening bell price, this is not the expected move. This is not gap adjusted, right? This is going to be opening bell price. Option market gives you the exact delta. So at the money, okay, this is some fancy option stuff. If anyone's paying attention, anyone's asking about this, but if this is the current price of the asset, let's say this is SPX at opening bell, okay, this would be at the money. So ATM is at the money. On the call spread, you're going to go to the expected move up, the expected move down around the 25 delta call, okay, and around the 25 delta put. So this trade, and I'm curious, I don't mind having a 51.4% win rate and making money, okay? The only issue that I have with this is that is literally like getting filled and knowing that it's a coin flip day. That's not that much fun. And it's not like you're getting like, well, I'm getting $3 instead of, and I'm risking 2 to make 3. It's like, maybe we can do that. So what I want to see here is like, if I'm going to sacrifice, my 90% win rate to go down to 51%, but still make money, I'm going to try to play around with like, okay, can I get this to give me a slightly bit better edge? Could I get filled for 275 credit? Could I get filled for $3 credit with the same structure? So this isn't terrible. I'm going to save this back test. This is at least something pretty promising for like I'll just call this one like daily profit play 1-to-1. Okay. So let's go create new back test, daily profit play 1-to-1. This is, I'm going to call this one coin flip because we still make money. Coin flip with small edge. Okay. But I'm not thrilled about a 51.4% win rate. So now what I'll tweak is, could I bring in a little bit more premium? Could I do like a 275 credit, which makes me risk 225, which makes my winners slightly bigger than my losers? If we can keep a similar win percentage, our average winner is going to be closer to 275 and our average loser is going to be closer to 225. That $50 difference is in our favor. We'll make more money. I mean, we might take less trades because it gets filled less times, but that's kind of the next step is if I can give myself an edge here, I've got to give myself an edge with the win percentage, or I have to give myself an edge with the total return as far as my winners have to be bigger than my losers. Does this make sense? Matt, this is option omega. So let me tweak this. I'm going to go 25 delta and let's change the premium here to 275 credit and let it run. So that way I get a little bit more premium. And 25 delta is aggressive. Like that is literally when you look at a broker platform, this see how this is right here? Look at the expected move. This expected move is trading for about the 21 to 24 delta. This one is trading for around the 24 delta. So what you're doing on a Tasty Trade platform is when the market opens, you are selling these calls and you are selling these puts, creating your width. I did a 5 wide spread. Okay. So I'm doing, and you know, this is scalable. So if I did a 5 wide, this is where I get. So if I did a 5 wide spread, 250 credit. Okay, let's play around with 275 credit. Let's also play around with let's try it, $3 credit. So this one had about a 51.54% win rate. I think it was 4. Okay, I'm going to see if this one still keeps a decent win rate, but we can take that little extra premium, have a slightly higher winner versus a loser. Okay, and I also want to look at this from a 10 wide, and we'll go minimum $5 credit, and we'll go, let's say like $6 credit. We'll go $7 credit, and heck, we'll even go $7.50 credit. Okay, I'm telling you, like, this is what's kind of cool about this stuff with options. Like, you can take this trade and set it up however you want. You know, like option trading is your sandbox. What are we sacrificing? This is, if you ever watch Tasty Live, you might know the guy, Jim Schultz. He always say, for every gimme, there's a gotcha. I mean, this is what I've said for a long time. It's just, there's always something that's a trade-off, right? Don't have any blind spots when it comes to trading options. You should know what your reward and risk is. Know what's at stake. So if I build this trade out and I set a hard rule that I refuse to take less than $2.50 credit, my question to you is, are you going to get filled every single day at $2.50 credit on a 5 wide trade? No, no way. There's no way. The price will not move that much every single day to get filled with that type of credit. Okay. But if it does get filled and we can still win 51% of our trades, I know that doesn't seem like a lot, but 51% still makes money. And this is with fees, by the way. I'm putting with the back test, I'm showing fees and commissions. So we're still making money. But I think to give us a bigger edge or to let the net results look a little bit better, let's see if we can get the slightly higher credit. Slightly higher credit. We'll play around with either the 5 wide or 10 wide. And this is kind of a different way of approaching daily profit play, where if you're worried about the slightly higher risk than reward, this is the way to offset that. Okay. And the trade-off is these trades aren't going to fill every day, but when they do, and you give yourself a little bit of an edge, I don't think it's a bad trade. Okay. So let's see what we have. All right. This is testing like four years of data, so I get it's going to take a moment, but fun for me. Live clipping. I know what that is. And by the way, sorry yesterday if you joined me for the afternoon session. I was trying to jump in around like 3:30 for our closing playbook with the build to trade, but my restream, it didn't pull in the audio from the other panelists. So when Nate and Kane and JD were talking, it wasn't pulling the audio. So I shut down my stream and just stuck with Zoom. I thought there was a way to pull in like computer audio, but I think the reason why is because I can do it if I pull somebody into my restream link. But when I'm basically pulling up another session like Zoom or GoToMeeting, it didn't pull in the audio. So that's why I cut the session yesterday. Nice. Are you talking about the TLT trade yesterday? Nice. Yeah, we'll see what it does. I mean, I don't know, man. It's going to be an interesting trade. I mean, hopefully bonds just stay stable through all this. Last year, bonds had about a 94 to 95% efficiency rate with just doing like 30 to 45 day iron condors. I mean, they were profitable like 95% of the time. It's like everything stayed within the expected moves so many times last year for bonds. So we haven't really had like a runaway bond market. It hasn't been super choppy or I'm sorry, super volatile and directional. So that's what I was kind of banking on is I can make like 30% return on risk, which is pretty good. The way that Kane structured his trades is he's using the full $1,000 over two trades, and then one of them, I think it was this Apple Butterfly that was giving him a little bit more profit opportunity. But we'll see. He has to win both trades to beat me. So hopefully, if I win one, I win, and we'll see. But it was a fun, fun little March Madness. We'll see what happens next week. Dave, this is going to be recorded. I mean, this is being recorded on my YouTube channel. So if you want to check it out on my YouTube channel, youtube.com/Chris Pulver, this will be popping up and probably populated. It'll be under like the live section. It'll just be timestamped for today. So April 2nd, you can find today's video. I mean, it's going to be labeled as like S&P critical support bull and bears fight every day. I mean, just look at the timestamp for April 2nd. Okay. Come on, Omega. I was hoping this would not take forever, but anyway, I'll save some of the stuff. What I might do to move this a little bit faster for tomorrow. So for tomorrow, little core strategy review. I'll probably have some of these back tests already done and saved, and we can review them together. That way, it's not like let's just sit and wait for 5 minutes before my back test runs. Let's see here: 64, 45. 50, 65, 90, 95 for $1.05. So you went 5 wide there, Vlad. That's not bad though, Vladdy. For those calls, that's not bad. You're a little bit higher than me. And then your puts are a little bit higher, 45 and 50. What's the expected move box again? Expected move box is around 64.25. Okay. So you're a little bit tighter on the put side, but that's 5 wide for $1. That's always decent, man. As far as reward to risk, that's always decent. All right, we'll see if this one gets done. So what I'm trying to do in this one is adjust that 25 delta, 5 wide spread for a 275 credit. So like I said, I'll finesse it a little bit. If what I see here is on the 275 credit, the trades go down from like 400 trades over the course of 4 years, which again that shows like it's not a super common thing. If we had, I mean, we've been trading for 4 years. There's about 250 trading days a year. So I mean, you got 1,000 trade opportunities over the last 4 years. So 2022 to 2023 to 2024 to 2025, so far into 2026, you have about 1,000 trades thus far as trading, zero DT since summer 2022. This filled 400 times. So if the frequency is even less, so roughly, you got 400 trades out of about 1,000 and change. I mean, you're getting filled about 40% of your trades. Again, it's why does it work? Because you play the numbers. If I win 51.5% of the time, I still make money. Right? It's not going to be a bombshell type strategy that's going to be like, wow, I crush it on the strategy, because 51.5% is not that great. But the sample size of, well, it's a small edge and you're 1-to-1. I mean, you can make money, but I don't love that. So I think that would be a trade where if I'm going to do it, I'm probably going to have to throw some more risk. Like I might want to take a trade like that where I'm doing like 4 contracts where I can risk $1,000 to make $1,000, and that way at least I got something to show for it, right? So anyway, we'll see how it all plays out. Okay, current price. Watching that top bear call combo is trading for about $1.10, $1.15 right now. My strike at 80 is now trading for about a 16 delta. It still should stay out of the money. It was a single digit delta when we started. It should still be safe. I'm curious if the 50 handle. So let's see if we get to 64 or 65.50. If that offers a little bit of intraday resistance here to push the market back down. Price action wise, one thing that wouldn't surprise me is we started here for the day. We work our way up to this positive negative gamma pivot point, and we come right back down to center. If that happens, these trades are looking pretty safe for the rest of the day. I would think. I don't want to see price gap lower and spend the entire day grinding, getting through the positive negative gamma pivot because that is a pretty open space. So hopefully we're not filling up too much here. But even if we do, there's still some levels for us. This offers some resistance. All of this offers a little bit of resistance, and even the gap fill at 75. If the market comes up here to try to fill it and fails, I wouldn't mind that trade. Like, just we stay safe. We got some defense and hoping for the best, obviously. Just trying to trade a plan. That's all. All right. So that is trading for $1 still. My dollar initially is now trading for like $3. So I'm down a couple $100 on the day. No big deal. But I'll watch it. I'm not going to double up on this thing. I'm just going to hang out and wait, let it marinate a little bit longer. Crikey. I feel like this is not. I think I'm just going to start this over. All right. I saved the test. I'm just going to start it over. See if I just get like a new data feed. They're not dividend stocks, Dorley. They are basically treasury mix holdings. So it's so the one that I put most of my cash in was SGov. That was a 4.13%. USFR is at 4%, and BIL is trading around 4.10%. Oops, I'm gonna go everyone. There, I just put that in the chat. Bill says, how do you win in an unbalanced butterfly? Well, you're talking about a broken wing butterfly. And so you'd win on the trade that we took. So my defense trade, kicks in starting at 75. Okay, so let me find the exact numbers here. Let's go 75. And then the pin price is 90. And the risk is all the way up above 65 or 66.20. So let's zoom in, and this is what my trade's going to look like. So I have no downside risk. I have my trap peak, which is $15. And then I have my, this would take me up to 66.05. 66.05. Okay, so the way this, I'm going to delete the green lines to make this easier, but this is the way the trade's going to work. There's my trade. Okay, and then my risk is going to be greater up here. Okay. So what that means is right now, I have that 10-cent debit, and that's all I have on the trade is a 10-cent debit. Okay. So as long as price stays below 65.75, so if we're less than 65.75, we're going to lose a 10-cent debit, and there's no profit trap, there's no defense. Okay, nothing happens, no win, no harm, no foul. We'll lose 10 cents. If we are at 65.90, that is our $15 profit trap end of day. So the way that I manage the profit is usually in the last like 20 minutes of trading, like literally 3:40, 3:45, 3:50 p.m. If price is hanging out somewhere in here in the final like 20, 15, 10 minutes of trading, I usually start looking to manage profit. Okay. And what I'm going to look at is, am I profitable enough to have my profit trap offsetting some of my risk from my bear call spreads, which is what I would need to do. Okay. For this thing to be perfect, I need it to be around 65.85. That's a $1,000 winner. 65.90, $1,500 winner. 65.95, $1,000 winner. So I still have some wiggle room in here, right? So if I'm plus or minus 5 points of this, so at 65.85, that's going to be a $10 profit trap end of day. And if we're at 65.95, is still a $10 profit trap end of day. Okay. Let's say that we settle. Let's say that we settle the day at 65. I'm just going to throw a number out there. Let's say that we'll use an example and we close at 6588. Okay. Here's how the math works on this thing. If we close at 6588, my bear call spread is a 6580 by 6580, or I'm sorry, 95. And my bear call spread is a 6585 by 6600. So this trade would be down, $8. This trade would be down $3. Everybody follow the math on that? Now I still get credit on the trade. So I pulled in, and I'm not stoked about this credit, but I pulled in $1 credit. So I'd be down $1,100, $1 credit minus $11 of bear call risk equals $1,000 loss. Okay. If we close at 65.88, my profit trap kicks in from 75 to 88. That's $1,300. Okay. My defense is 6575 to 6590. I'm only off by 2 points from max profit. $1,300 in defense profits, less the $1,000 loss or the $10 loss on bear call spread. Well, I'd make money. So I take my bear call spreads, I play defense, the profit trap helps me, and I could still make a few $100 to end the day. Right? What if it happens if price is at like 6,600? Well, I still have profit trap. I would still be up about $500 on the trade. Okay. But $500, and I'm taking on the risk of the bear call spreads. I'm probably going to still lose on the day, but I offset it by $500 on a profit trap. So look, defense, as we saw, isn't perfect. Most of the time, defense doesn't even come into play. Most of the time, defense doesn't even do anything for us. But if I need it, it's kind of like my 0-day insurance. You know, I'm happy to have it if it helps me. Sometimes it's a throwaway trade. Sometimes it costs me more money. You know, but it's cost me more money twice in the last freaking 4 years of doing it. It hasn't been super expensive to play defense. So anyway, but this trade stuff, the defense trades are always more profitable near the end of the day. I'm not taking defense trades to get out of them early. Okay. If I'm going to get out of a defense trade early, it's because I'm taking my daily profit play trade off the table and getting rid of all my risk. I'll just take all the trades off the table. And I'd just eat the 10 cents. That's all. Okay. How should we think about the price for paying for defense? I said this in the core strategy video inside the classroom. If I'm playing defense, I'm usually not trying to get filled I don't want to pay a lot for defense. You know, and this is why I started my defense talk and daily profit play with broke wing butterflies, because usually that's the most cost-effective way to trade defense. If you want to do a butterfly spread, you're going to pay more for that. Typically, you don't have the profit or the credit up front on a daily profit play iron condor in order to get that defense to pay for itself. Like the butterfly spread is usually going to be a healthy debit. It's going to be, if you want to go like 10, 15 points wide, 20 points wide, it's going to be $1, $1.50, $2 debit. So unless you're taking, 5 contracts in the daily profit play or 10 contracts in the daily profit play, you're not pulling enough credit to justify paying for that thing. And there's obviously a lot more risk there. So all I'm saying is the broken wing is good structure. I don't like to pay more than about 25 to 30 cents for them. And I obviously I'd rather take them as a credit. I'd rather take a small defense trade with credit. But it's hard. I mean, not every day the market's going to give us, broken wing butterfly profit trap trades at these single digit deltas and give us credit to take it. So I usually am fine with like a 5 cent, 5, 10, 15, 20 cent debit. As long as I'm pulling enough credit on the daily profit play stuff to justify throwing the defense trade in. Okay. So break even on these spreads. My exact break even, it's not going to be super great. My my break even is going to be. So our bear call spreads 65.80 by 65.95 and the 65.85 by 6,600. Okay. So if you split the difference, the two sell calls break even is 658250, right? So 8250 plus a dollar credit that I pulled in. So that's going to be 6283.50 is going to be my break even price for the day. And what is the fucking market doing right now? 65.44. All right, dude. We better see what this gamma level looks like. What is happening right now? Nothing. Reducing demand for bank reserves better than returning to scarce reserves. So it's Fed talk right now. Mark is doing some repair this morning. I mean, there's nothing on the calendar. Bowman talks at 12:45. This is, well, it's, I mean, whatever. We still have room. It's just annoying to see that, well, what's the market doing for the day? Gap lower, pushes a little bit down, and it's just repairing itself. Like the market's just doing repair. All right, well, let's see what it does. Couple key levels. Again, I mentioned this all morning. Watching this area here. Okay, watching to see how price behaves at this negative gamma spot right around 65.50. Gap fill up here just above the 70 handle. We're still above that. 65.80 is still out of the way. It's still out of the money. So even with this move here, I mean, I would say that this could be considered, a 5-minute time frame. This is still considered pretty inefficient for the day. So later in the day, I would say if the market does this all morning, I would imagine that the market's going to do something like this later in the day. Rarely do we see the market go down and just rip up all day. So it's, I don't know. I've got to trust the process in the market, but who fucking knows? But bottom line is I accept the risk. I followed a plan. I didn't throw in bull put spreads. I thought the market would be, better suited for just kind of hanging out around these lows with some of the damage that was done overnight. But we'll see. Let's see what the market does here around the 65, 50 to 60 zone, because that's where that positive net gain of a pivot is. And with this kind of inefficiency, we'll see if the market actually turns. Interesting day so far. All right, what else is going on? So oil, spikes up look at this thing. I mean, this correlation is nuts, man. Like this inverse correlation, look at the VIX. Dude, am I going to get out to the upside here? I just got filled for $10 credit. What is happening right now? This is insane. I got filled for $10 credit on the same stacked order. This is wild, man. All right. Well, this might be a big F me for getting blown out on 0DT, but this market is entirely inefficient for the day. Like this is silly. Let's see. The crazy part is I just got filled for a $10 credit on the same 15Y that I just did. So that could make this thing very interesting for the day. That puts my break even a little bit higher. But my gosh, man, what a silly move for the day. Right now, let me get these things organized. So I've got the 80, so 65.80 by 95. Look at this stupid ass market. This is wild. 80 by 8, so 80 by 95 and 95 by 66. I got filled on 2. I've got one filled for $1, one filled for $10. This is crazy. So let me take these. So DPP bear call. And then I have the other call size at 6610 by 25 and 15 by 30, which right now is also selling off a ton. And then I have my defense. This might be a wild one day before the holidays. Uh, top defense. Okay. I already put the defense in. So bear call spread. What's this one trading for right now? This one's trading for like $7. All right, let's see what happens. So, it's early in the day. It's 10:30. There's still a lot of time left, but basically bear call spreads, top defense. Um, we'll see where the market goes. I know my break even on defense is 66.05. So if price stays below that, I've still got a fighting chance to defend myself. With the two fills on the bear call spreads, I got filled for $1. I just got filled for $10, and that gives me an interesting break even now. So that would be 6580 by 6595 and 6585 by 6600. So $1 credit and $10 credit. So $11 total credit, but it's in two contracts. So my break even is going to be $5.50 higher. So it'd be 62.85 or 65.8250 plus 550. So my break even on the day now is going to be 65.88. 65.88 is going to be my break even on the day. So if price stays below that, I'm okay. But I mean, look at this market. I will say, like, this is kind of nuts. Like, this is seriously an inefficient move. So it wouldn't surprise me to see the market like not allow this for the day and kind of come back in and balance. But my goal right now is, since we had such a ridiculous move, I mean 12 all the way up to 02, there's a 90-point move. That's beyond the expected move, right? We had a plus minus 70 this morning. It's up above that. We'll see if this gets breached and then comes back in within the expected move for the day. I don't know. I mean, if this is going to get like another wild and crazy, I'm going to get blown out to the top, then F me. Hopefully not. Yeah, 70 points in 5 minutes. That's what I'm saying. Like, this should not be something the market's going to, take and tolerate. Um, but I'm telling you, like, this upside risk stuff is real. Like, it's crazy what this market does, and this is what high volatility can do. Even if the market is going to be rolling over, like mostly bearish, these are the type of intraday noisy moves that can happen. But I'm just going to go on a limb and say, like, I think the market may have just put in an intraday top, and we might spend the rest of the day just falling back down, which could make the rest of the day very interesting and still pretty profitable. So my goal right now with the trades that I'm in is watch this stuff. So there's my bear call spread. I'm down $500. There's my bear call spreads. I'm down $1,200. Okay, like, I'm accepting the risk, and it's a lot of risk. It's probably $3,000 or more today, but I still have a fighting chance at 65.88. I still have a defense trade that kicks in around the 65.90 zone. We'll see. But if this turns favorable today, because I got filled for more size here, if this and this add up to any decent amount of profit at this point with the size, let's say if I'm up like $300 to $500 on the day, I'm probably going to take it. But wishful thinking, because now I don't know what the market's going to do. This is inefficient, but the market might do this. Inefficient pop. If the market goes inefficient, pulls back and retests and goes right back up, we might just chop around here for the rest of the day, right? I mean, I'd be a little shocked to see the market rip and go crazy bananas to the upside. It could happen, but I don't know. That'd be way more surprising. Okay. So let's see if we just pull back to kind of something normal, like 65.50. Let's get back to positive negative gamma, perhaps, see what that looks like. Let's just set a couple chart alarms, and I'm not going to sit here and obsess over this, but look at what the VIX has done. The VIX had a pretty decent drop, and we'll keep an eye on it. Oil is falling, but I mean, it's like quick spike and it's stabilizing. So I don't know, man. Buckle up. This is going to be a wild day. Not what I wanted for a Thursday, but here we are just living through it. So either way, we learn from it. I just hope we learn with dollars in our pockets versus like, oh crap, what? Because look, what would I have done differently? Not much. You know, why did I take the trade that I did? Well, outside the expected move from the broker platform, not the gap adjusted. I realize that, not the gap adjusted, but that profit, like this offered little to no credit, right? This offered little to no credit. This offered little to no credit. So that's not the trade I would have taken. So I got into this area thinking like, all right, well, we had the expected move based on the deltas. We had less than 10 delta when the day started. I mean, I would take that trade most every day. So, like I said, it is what it is, and we'll see what happens. I'm hoping that this type of inefficiency, the market will realize like, hey, this shit can happen. But one never knows. So if it, maybe it comes back up here to test and fail, works its way back down before the end of the day, let's find out. Because I would say based on this open, okay, based on this open, you go plus or minus 71 points from the open. We're talking about, there's your 71 points right here. Okay. So that I'll put in black. This is like the broker expected move from the opening price. And obviously the put side is almost irrelevant because we're not even close to it. So from opening price, which is here, going down 70 points, there's your 71 points right there. So based on market efficiency, that would be like from the opening bell, there's your plus or minus 71 points. The day isn't done. Yep, $15. I mean, I got filled for 10, and that was like a wishful thinking. So that $15, by the way, David, is like a 1-to-1, right? You get $1,500 if you're right, $1,500 you're wrong. That's not a bad trade. It's just crazy that that's even offered today. Meanwhile, let's go back here to little option Omega. DPP coin flip with small edge. Let me just retest this one. All right, so 25 delta. I'm going to go a 275 credit. So 275 minimum. See if that'll carve out a small edge. So I think it could be, it could be a poke of those highs to be like a liquidity grab. It's very possible. Let's see if the gamma profile flipped on the day. I mean, so in a way it did, right? I mean, the gamma was here like very small positive gamma, and it flipped on the day. But I would like to think that price is not going to continue to go higher and have nothing to show for it as far as like option prices and flows. So if this is poke the day, scramble and take everyone's dollars, and then it kind of settles in where it's like, okay, open, high. I just I need price to just close less than 65.80. That's all I need. So if we're right back down to where we started for the day, yippee freaking skippy. I think we can still make a decent amount of money today. But it's not for making your butt pucker a little bit when you get a 70-point move in 10 minutes. And that's the crazy stuff we sign up for with 0DT. You can, and I'm telling you, like, I don't know how many times I have to talk about this, but it's like, this is why risk is the most important thing. Because look, I mean, I'm on the hook for maybe $3,000 to $4,000 of risk if I'm dead wrong, and it's going to suck, but I accept it because I took the trades, And like I said, if I go back and say, what would I do differently? Nothing. There's nothing about this I do differently other than like, holy crap, I can't believe the market did that today. So we'll see what happens. One thing I could consider as and if we go higher, maybe having some cheap defense up here. I don't know. I'll play around with it. So I could go. I don't want to overlap too much here, but we had a poke high around 6,600. All right. What I'm thinking of is, I mean, if it's cheap enough, I might throw on some defense here. So 35, 45, and 60. Maybe a little credit up here. Ugh. I mean, that's $1,000 profit trap. It's going to be, if I could get it for a credit, that's not the end of the world. This one, this is a maybe. I mean, it's a little bit of profit. I'm still taking on some risk, but I could also throw another, I mean, I'm not excited about 70 cents. This is more about defense. $500 in defense doesn't really do much for me, but this defense is at least adding, 5 or 10 cents to my bottom line and offering another $1,000 chunk. So let me see if I can get this thing filled for 20 cents or 10 cents. Even 5 cents is fine. 5 cents credit. Give me 5 cents credit. It might not fill. That's way out of the way, but I'd rather take it for a credit. We'll see. I mean, the updated defense, I just put it in. It's the updated defense is just a broke wing butterfly that I just put in. It's a 6635 by 45 by 60. It's not even filled yet. So I'll throw it in there. It might not even get filled, and that's fine, but I'm going to do another top defense pending SPX for 2 expiration by the 6635. Sell the 6645 and buy the 6660 for 5 cents credit. It's pending. It's just helped me maybe offload another $1,000. Again, I'm not surprised that the market is doing something like this where it's inefficient right away and fading a little bit. We're back down to 65.61. Remember, the line in the sand for us is 65.80. So we will see if the market can respect that. Maybe, get back down to this positive negative gamma pivot point around 65.50. Let me take a look at the current price. So there's some improvements, but because of that high volatility, I've still taken on risk in all these trades. So, this one's down $400. This one's down 1,000. This one is, I mean, the defense trade's not going to be worth anything until the final 15 minutes of the day anyway. Romel, it did fill. Is it Romel or Rommel? Is it Romel? I know you said it was a long O. Romel. Okay, Romel. Got it. Thank you. So, yeah, we'll see how the rest of the day plays out. 65.80 still the line in the sand. We're trading at 65.60. Cool. I mean, we got a fighting chance. So here's kind of what I'd love to see. Obviously, I'd love to see price less than 65.80. Less than 65.80. I'd love to see price go open, low, high, close, and just kind of sit right in the middle of the day. Right? That'd be great. I mean, at this point, since we're in bear call spreads, I wouldn't mind seeing price go all the way back down to where we started the day at 65.20, because by that point, we're probably going to see some profit in our bear call spread combos. Okay. So the good thing is we've got some clearance now. Risk has been reduced quite a bit. So, I'm still down a little bit in each one. That's fine. There's a lot of volatility on 15 wides. I get it. But it's looking obviously better than watching this thing just blast off through 6,600. And on that note, let me see if I went 05 So 05 to 15 to 40. I mean, this is another $1,000 profit trap that puts my break even around 66.25. Again, totally up to you if you want to accept the risk, but this would be, we'd have to make fresh highs on the day. I'm not saying that we can't, like, don't take this stuff lightly, but it's like, this would be another $1,000 on top of this. Gosh, it's like, it's a really tough call. Part of me wants to put in defense, and like, what a crazy day, man. But I mean, this also offers another like $1.20 with a 10 wide. Like, that's a good credit. If I bought it here, that'd be a buy sell. That's offering a small debit for a 20 wide. Let's see. It gets a little messy if I do this because I'm overlapping strikes. That's why I'm trying to do it this way. That's 10 wide. This is 15 wide. I can still get credit on this. That puts my break even at 66.30 with a $1,500 profit trap. That's tempting. It does make it a little bit more challenging to manage some of the trades when I'm overlapping. So I'd be looking to buy 6,600, sell the 15. That gives me a $15 profit trap up to 66.30. And I could do this for a small credit right now. This trade is a little bit better as far as credit. You know, I can get another $170, $175. My break even 66.25. I don't know. I mean, part of me thinks like this is unnecessary to throw that type of extra risk in there. This at least is a bigger profit trap and is still offering credit. That is a no. I'm going to try to take it for a smaller debit. This one's not bad. So for like 20 to 40 cents credit. All right, I'm going in. I'm taking it. This is another, I'll try to get like a 20 to 25 cent credit. See if we get like 30 cents credit for this. 30 not filling. 30 cents filled. All right. We'll see. We'll see. All right. I just, again, totally optional. I might be biting off more than I can chew here for some intraday defense, but adding another top defense for credit, accepting the risk. The break-even price in that would be 66.30. So hopefully we're not going to, breach that, or if we hang out around 6,600, there's a potential profit trap in there for us. But SPX 4-2 expiration. I don't know, man. This is chalking up to be a pretty wild day. So 6,600, 66.15, and 66.45. So I got filled for 30 cents credit. Bill, that's funny. Bill says, look on the bright side, nobody's fallen asleep during the class. That is very true. Very true. If you are, then you may be passed out from the drama. If you're falling asleep at the keyboard, it's because this is too much. But anyway, all right. Look, I'm clearly stacked up here. We've got some risk around the 80 handle, which is where we are at right now. I'm certainly hoping that the market can respond to, closing back within the expected move on the day, which takes me back to this chart here. This is where we started the day. Expect a move plotted here. Let's see if the market will work its way back down below, number one, stay below my green line, stay below my black line. Maybe we can pull back to this efficiency for later in the day. This would be around 60. I'm just going to put a chart line here around 65.40. Okay. So hopefully this inefficiency is going to be contained. If we break the highs, obviously I got to be prepared for, maybe a push up into like 20 and change. I will be annoyed if price somehow with my gap adjusted expected move box comes up here for the high and hangs out here. Maybe it goes a little bit lower, but it like actually finds the expected move box high, which is why I built the indicator. But I would not have expected. I mean, again, this is gap adjusted. Like I am taking on way more contingencies, and I'm absorbing way more flexibility by putting on my top is here based on a gap adjusted move. And I mean, this is why I'm pretty confident that most of the time our price is always going to be within the expected move box. But positioning wise, I mean, I did not expect this trade to be something that would be threatened today. But again, this is why I trade, and I wish I won every day, but we'll see what happens. The day isn't done. That's all I can say. Okay. I mean, I'd say if it was intentional, I mean, I get it. Like stuff like this is heavily manipulated. I think this is certainly testing some of the call sides, right? This is testing liquidity up here. I get it. Um, but when it's more intentional, I think this is also like the market's going to do this. That would be intentional, where it's like there's something clearly going on where it's like this market just pumps, pumps, pumps. And it's just like a wild blowout day. And I'm hoping that's not the day. Like this move, I think there's something to that. I don't know what it would be exactly outside of I mean, possibly like a futures liquidity grab. But I'm telling you, like, I've seen this enough that the market should somehow retest this area today. So if we go up and make a high for the day, and we're just going to kind of work our way back down. I could see us working our way back down into here. That's why I got a chart alarm. I will check my P&L. If this chart alarm goes off around 65.40, I'm going to check my P&L and see what I've got for the day. Okay. If we're just hanging out here, lingering for the day, I mean, I don't know if the market can just keep mustering up higher highs. I hope that it doesn't, you know, but I'm going to throw a couple profit traps in there and see if I can hope for the best and offset some of the risk. If it's down below our green and black line, great. We've got profit here. If it's not, I'm playing defense and buckling up to try to offset some of the risk. Right. So we can take a look and see if there's any real-time news. Slumped oil sword again, crushing hopes. That was, I mean, that's old news. Fed talk. It's like you're not moving on the Fed today. Protocol does not constitute restrictions. All Fed stuff. Drafting protocol. This might have been, I mean, again, the market 1035. Okay, there's 1030. So is that it? Traffic. I mean, I guess. Remember, options market are smart. This isn't like, oh, we have no idea what's going on. Like this stuff should be priced in. This is why I think the market still gives us a fighting chance to to give us a winner today. But I realize I'm gonna have to buckle up and take on all this intraday volatility because I don't know what the net result is going to be for the end of the day. But all I need price to do is be below 65.80. We got a fighting chance to make some money. From let me look at this perspective here. 15-minute chart. Actually, let me do this. Let me take this back to the 1. Let's go to this chart for SPX. I look at this intraday. Here's a 5-minute chart. I mean, what I thought was interesting on this little move from the low on Monday to the move on Tuesday, Wednesday is that we still didn't take out these highs. So that's why I wasn't thinking like this market could have a thrust to the upside without having something like this. If it doesn't break the high, I think the market goes up, down, and maybe forms a flat pattern. If there's going to be some bulls, they got to hang out around the 6,500s handle to go higher. But if this is just breaching to then get reset, we'll see what the rest of the day looks like. Okay. And peak to trough wise, I mean, we're close. We're close to that full 10% sell off. There's 9.8%. And Trump is kind of your first vocal line of defense. So we'll see what the day gives us. Am I taking on risk? Yes. That second bear call spread, which would have been nice to get filled for like $7 versus $1. But This is the one I'm paying the closest attention to because that doubled me in at $10 and you know, $1 and $10, so that's a 550 break even on that. So I know that this one needs to be less than 65.88. Okay, if it's less than 65.88, I'm not taking on any risk today. We're trading at 63 right now. There's a fighting chance. Okay, these probably much safer. These are just the one contract. This is for $1. That break even is 6613.50. Okay, and I got a couple of defense trades in. So we'll see how it shakes out. Crazy stuff. Never a dull moment. Market's not done. So watch the line in the sands, and I don't know. We'll do this later. I got to double check. I know we have a doctor's appointment today. It's going to be pretty important. I think it's after 2 p.m. Our time, so that should be after closing bell. But I might be on the road before closing bell, so that might mean taking the computer, getting on a mobile hotspot. If things look really edgy into the end of the day, if we're hanging out around current prices near the end of the day, then I'm probably taking the computer on the road. If we're down here at all in the next 60 to 90 to 2 hours, like let's say in the next couple hours, then I'm probably taking some profit and eliminating a lot of this risk and getting out of the day with a win. Okay. So I'm just going to, I don't know, I'll hopefully be out with profit, and I'll update that in Telegram. If I'm hanging out with, some clutch decisions by the end of the day, I'll make that probably on the road as we're driving to the dock. So, all right. I'm going to let you go for today. Deanna, are we firing up anything today? I know we did daily profit play yesterday. Okay, let me know okay. Yeah, let's wrap it up here. Fire up some daily profit play. And I will be, I don't know, I'll look for some Telegram updates for more. I'm going to work on updating the trade tracker for engineered options because, like I said, we're winning like 90% of our weekly trades. That's why I describe that course as like, yes, it's called engineered options, but it's like an income grid. I'm like stacking up those levels. Defense trades have kicked in a ton, and that's what we're going after. So anyway, I've got some work to do offline, but I'll keep an eye on everything. I'm probably done like stacking trades for the day, unless it's more defense and trying to get some profit traps. That's about it. And I'll let you go. So check out Daily Profit Play. If our doctor's appointment is later in the day and I have time to finish up closing bell, then I'll be live at the closing bell. But if I'm not, I'll be on the road. Just look for Telegram updates, and fingers crossed. All right, thanks. I'll see you soon. Thanks, Deanna.